Hey guys, welcome back to the channel. This video is a little different than the usual stock analysis videos that I do, as I won't just be looking at one or two stocks in the stock market, but instead I'll actually be focusing on a group of 29 stocks called the Dividend Kings. I will go over why these companies in particular are special, any that piqued my interest while researching, and how this group of stocks compares to the S&P 500 in terms of valuation and dividend yield. At the end of the video, I'll touch on the few companies that I own out of this group and why I chose to invest in them instead of others, so make sure you stick around to the end of the video to hear that. As many of you guys know, we have a goal of getting this channel to 2,000 subscribers by the end of the year. And right now, only 17% of the people that watch my videos are subscribed to the channel. So if we get that number to 50%, we would smash that goal instantly. So if you enjoyed the video, please like the video, subscribe, and leave a comment telling me what other videos you think I should do in the future. My next video that I have planned right now is my August dividend portfolio update, and I'll be talking about future videos then. But if you have any suggestions now, make sure to put them in a comment. This is going to be a long video, and it took a lot of time to put together, so I hope you guys get something out of it, and let's jump into it. So the group of stocks that I'll be looking at today is a very exclusive group of companies called the Dividend Kings. Now you may be asking, what is a Dividend King? And to provide some guidance on that, let's turn to the Dividend Kings list on dividendvaluebuilder.com, because the list I'll be working with in this video comes from that website. Now I'm not affiliated in any way with them and that business, but it's nice to have a list like theirs to work from. Dividend Kings are S&P 500 companies who've increased their dividend for 50 plus consecutive years. That's an amazing record of consistency. That's why there are only 29 companies that qualify for the Dividend Kings list. Think about it. 50 years is a long time. Booms and busts, inflation and deflation, high interest rates and low interest rates, these companies have survived and prospered through it all. In other words, you have at least found a company that's been able to move forward over many different environments and cycles. On screen now, you can see a list of all the Dividend King stocks in the S&P 500 right now, along with some basic metrics that we'll be going over in this video. I'll give a brief description of each of these companies to give some context to who they are, and after I'll talk about the trends that I see in these companies and how they compare to the general market. 3M, ticker symbol MMM, is an industrial conglomerate company that makes products for the safety, transportation, electronics, healthcare, and consumer industries. They were founded in 1902 and are worth about $95 billion. ABM Industries, ticker symbol ABM, is a facilities service provider that provides janitorial, parking, custodial, landscaping, and mechanical services for their clients. They were founded in 1909 and are worth about $2.5 billion. Altria Group, ticker symbol MO, is a manufacturer and distributor of tobacco and alcoholic products in the United States. They were founded in 1822 and are worth about $81 billion right now. American States Water Company, ticker symbol AWR, provides water, electric, and other contracted services. They were founded in 1929 and are worth $2.8 billion. California Water Services, ticker symbol CWT, also provides water and electric services throughout California, Washington, New York, and Hawaii. They were founded in 1926 and are worth $2.3 billion. Cincinnati Financial Corporation, ticker symbol CINF, provides property casualty insurance products. They were founded in 1950 and are worth about $13 billion. The Coca-Cola Company, ticker symbol KO, as I'm sure we all know, produces and sells various drink products. They were founded in 1886 and were $207 billion. Colgate-Palmolive, ticker symbol CL, sells consumer staple products like Colgate toothpaste, Speed Stick deodorant, and Palmolive soap. They were founded in 1806, which makes them the oldest company on this list, and are worth $68 billion. Commerce Bankshares, ticker symbol CBSH, operates a holding company for a regional bank called Commerce Bank. They were founded in 1865 and are currently worth $6.7 billion. Dover, ticker symbol DOV, provides equipment components, consumable supply software solutions, and support services. They were founded in 1947 and are worth $16 billion. Emerson Electrical, ticker symbol EMR, is a technology and engineering company that was founded in 1890 and is worth $42 billion. F&M Bank, ticker symbol FMCB, is the holding company for a regional bank out of Central California. They were founded in 1916 and are currently the smallest company on this list, currently valued at only $600 million. Federal Realty Investment Trust, ticker symbol FRT, is a REIT that owns, operates, and redevelops high-quality retail properties. They were founded in 1962 and are currently valued at $6.2 billion. Genuine Parts, ticker symbol GPC, is a distributor of replacement automotive and industrial parts. They were founded in 1928 and are worth about $14 billion. H.B. Fuller Company, ticker symbol FUL, manufactures chemical products. They were founded in 1887 and are worth $2.5 billion. Hormel Foods, ticker symbol HRL, produces various meat and food products. They were founded in 1891 and are worth about $28 billion. Johnson & Johnson, ticker symbol JNJ, is one of the companies on this list that I own in my portfolio. They research, develop, and manufacture healthcare products. They were founded in 1886 and are the largest company here with a total value of $403 billion. Lancaster Colony, ticker symbol LANC, manufactures and sells specialty food products. They were founded in 1961 and are worth $4.8 billion. Lowe's Companies, ticker symbol LOW, operates as a home improvement retailer in North America. They were founded in 1946 and are worth $126 billion. Nordson, ticker symbol NDSN, engineers and manufactures industrial chemical products. They were founded in 1935 and are worth $11 billion. Northwest Natural Holding Company, ticker symbol NWN, is a natural gas distributor. They were founded in 1859 and are worth $1.6 billion. Parker Hannifin, ticker symbol PH, manufactures and sells motion and control technologies and systems for mobile communication, industrial, and aerospace markets. They were founded in 1917 and are worth $27 billion. Another giant on this list, Procter & Gamble, ticker symbol PG, provides consumer packaged goods with brands like Head & Shoulders, Herbal Essence, Pantene, and Old Spice. They were founded in 1837 and are worth $344 billion. Stepan, ticker symbol SCL, produces and sells specialty intermediate chemical products to other manufacturers. They were founded in 1932 and are currently worth $2.6 billion. SJW Group, ticker symbol SJW, provides water utility services. They were founded in 1866 and are worth $1.8 billion. Stanley Black & Decker, ticker symbol SWK, produces and sells tools, storage, industrial, and security products. They were founded in 1843 and are worth $25 billion. Cisco Corp, ticker symbol SYY, distributes food and food-related products to the food service industry. They're the newest company on this list as they were founded in 1969 and are worth $31.5 billion. Next up, we have the other company that I hold in my portfolio, Target, ticker symbol TGT, who operates general merchandise retail outlets in the United States. They were founded in 1902 and are currently worth $75 billion. And last but not least, we have Tootsie Roll Industries, ticker symbol TR, who you may be able to guess sells candy products. They were founded in 1896 and are worth $2.2 billion. Now that we have that context, let's talk about some of the trends that are present in these companies. Obviously, to make this list, you must have been in business for at least 50 years. However, the age of some of these companies is staggering. A large number of these companies have been operating for well over 100 years, with Colgate-Palmolive being in business for the past 214 years. Also, there's a lot of businesses on this list that you have never heard of. This goes to show that in order to be a successful business, name recognition among the general public is not necessary, as many of the dividend kings provide products or services only to other businesses. So that's the reason why, as a consumer, you're never going to hear about these companies. Additionally, a lot of the business models wouldn't be considered quote-unquote sexy. They're just consistent, sometimes dirty and unglamorous work. But because of that, these companies were able to fill the need that others didn't really want to, and because of that, they were able to generate superior profits. On the screen now, you can see all these companies ranked by their current dividend yield, and it becomes pretty apparent the gap that we see in these metrics. At the top, you have Altria Group, who has a current dividend yield of nearly 8%, while at the bottom, you have Stepan and Nordson that don't even have a dividend yield of 1%. So the title of Dividend King can be held even if you pay less than half of the dividends that the overall S&P 500 index fund would pay you. On average, these companies have a dividend yield of 2.44%, which is decent, but lower than I expected. Just popping up on the screen now is a graph of the average dividend yield percentage of the S&P 500 for the last 20 years. And in general, it hovers at above or slightly below 2%. So, for one of the most highly respected groups of dividend stocks to on average yield just a little more than the general market, it's kind of underwhelming. Next up, you can see all the stocks ranked by their current payout ratio. What's clear to me is a huge variance between all of these companies when it comes to their dividend policy. Of course, they all pay and increase their dividend every single year, but the way that actually reflects in their numbers is very different. Cisco last year paid out almost all of their profits through dividends, which is not a good sign when you're hoping to invest in a stable, dividend-paying company, because there's no cushion for the company in case they have a bad year. But then other companies like F&M Bank and Stepan barely pay out 20%. So even if their business was cut in quarter from last year, their dividend would still be able to be paid. From my perspective, I see anything under 60% as fairly safe. 60 to 80% is probably safe, and a payout ratio of 80% is a little more risky in my book. And if I'm looking for a company to increase their dividend payment every single year, that's probably not the choice I would make. In order to increase dividend payments for 50 years in a row, usually the dividend is increased only a couple of percent every year. However, when these stocks are ranked by their average dividend increased over the past 5 years, there are a couple that really stand out to me as they've been aggressively increasing their dividend. A company that really stood out to me during this research is Lowe's, especially with their recent track record of high growth rates in their dividend. This is a company that I'm excited to do more research on in the near future, and maybe a comparison video between Lowe's and Home Depot would be warranted on this channel. But let me know what you guys think about that in the comments. On average, the Dividend Kings grew their dividend at an average pace of about 8% every year. Unfortunately, this kind of growth is not sustainable forever, because I'm sure if we looked back 5 years ago at the Dividend Kings list at that point, there was probably a couple names on that list that are no longer. So, the 8% that we see right now is only of the companies that continue to increase their dividend. We don't see those that cut it. The next column in my worksheet shows what their dividend yield would be if all of the companies paid out 60% of their profits in dividends. Now, this number doesn't really mean much in the context of an investment decision. However, for comparison purposes, it does show differences in profitability to the actual stock price. And finally, on the same note, we have the PE ratios of all the companies. On average, the Dividend Kings have a PE ratio of 24. This is in comparison to the S&P that, as you can see from the chart on the screen, currently sits just under 30. Most people's first impressions would be to think that the PE ratio of 24 for these super successful, long-running companies is too low and that they're undervalued. However, none of the Dividend Kings are really growing their business that fast, and it makes sense for them to be valued less than businesses with growth in their future. And I think that the valuation of these companies, even though it is lower relative to the market, presents a unique risk to investors that, if they're not aware of, could really impact their goals. So, these companies are held in a very high regard because of their impressive history of dividend growth, so investors are willing to pay more for that because they seem safer. However, if one of these companies were to run into hard times and need to cut their dividend, investors would be hurt in three distinct ways. The first is the hit to valuation that's caused from the business struggles. Obviously, if a company is having a hard time and the outlook of profitability and revenues is uncertain, investors would not pay as much for that company as they would without that struggle. So, the stock price will fall because of that. Second, the investor will lose the income generated from dividend payments. Both of these risks are present in all dividend-paying companies. However, the last one is unique to this group. If one of these companies cuts their dividend, they will also lose the prestige of that Dividend King title, and their year of consecutive dividend increases falls to 0 years. So the premium that the company used to command in the market is lost, and the stock price will fall even more because of this. Now, because I own 2 of the stocks in this list, I think that additional risk is worth it in some circumstances. But it is something that people need to be aware of if they're going to be investing in these companies. To wrap my feelings up about this group, I would say it's a mixed bag. There's a certain level of comfort that comes from a solid track record of prioritizing dividend payment growth and the long-standing success of these businesses over the last 50, 100, 200 years. However, the underwhelming dividend yield, coupled with the slow growth of their business in general, is a negative factor. I decided to invest in a few of them, namely Johnson & Johnson and Target, because of the future growth opportunities that I see and a reasonable ability to aggressively increase their dividend over the next 5, 10, 20 years. However, I don't think that's the case with the majority of these companies. I may choose to invest in one of these companies, maybe 2 in the future. However, as a dividend growth investor, I think that the sometimes over-conservative nature of some of these companies will limit my returns. Hopefully this video provided you guys with some value. Since all of you made it to the end of this video, make sure you like and subscribe to the channel so when I release more videos in the future, you'll be able to see it. I will be releasing my next video where I will give an update for my dividend portfolio for the month of August next week. So make sure you guys look forward to that, and I will see you guys in the next video.